You were so early to the commodity rally.
Dude, I said gold 5,000. People thought I was fucking crazy.
No, but even like last summer, commodities had been rallying, but not like this. And they just exploded starting in the first of the year. It was like a brand new bull market just started for a lot of them.
And here's the interesting part about commodities is that historically, these bull markets don't just last a few quarters or a few years. They last 10, 20.
Yeah.
So if you're betting this is over, then you're betting that this is the shortest commodity super cycle ever.
Who's your boy that did the chart yesterday? Is it Alfonso that did the gold to stock chart? And it looks like it might be breaking out.
Oh, yeah.
You know what chart I'm talking about? Of course you do.
Yeah.
That's a great chart.
Gold Dow. I think that was Slick Rick.
Okay.
We got this this Lebanese Mexican dude.
Really?
Slick Rick. He's the man.
He does commodities only, or
he just does everything, dude. He's like overlaying tech with like the Israeli shekel. Like this guy's.
He's a Lebanese Mexican.
Yeah, they got those. Yeah, Lebanese Mexicans. Yeah.
You got a lot of talented people on your roster.
Thank you. I agree.
Great chartists.
How's Kenny doing?
Dude, Kenny is a legend.
I know. He's hilarious.
Love Kenny.
He's the funniest.
Showed up on the morning show today with no shirt on. Right? Just like this, like 1970s disco shirt and his chest hair all sticking out.
He had like a jacket with no shirt under.
Right.
Wait, for the audience, not everybody knows Kenny.
So Kenny, right? If you don't know Kenny,
Kenny Glick, aka Kung Fu Kenny, aka Hit the Bid. Well, he's like
Jefferson Kroll.
Jefferson Kroll.
He was like
so
he was
insane.
like Davey Day Trader before, like way back in the day.
I was gonna say that.
But he actually knows stocks. Like is the funniest person on camera talking about stocks.
100%. He's the grandfather of day trading because think about that. Because day trading didn't exist until Kenny got on the scene. Kenny was there day one. He's the grandfather of day trading.
Yeah, he invented day trading. What are you talking about?
No, he's a mid to late 1990s vintage day trader. They don't make them like that.
They don't make them like that.
No.
You can't.
And most of those guys have not survived.
Does he still day trade?
Right. That's my point.
Does he still day trades?
Every day.
Dude, if you still have capital and you're doing it like late 90s style, you figured something out.
Well, he trades the only intraday strategy that I've ever seen work, which is you're fading rallies and you're buying dips, particularly after earnings. They cross the one-day anchored VWAP, and then that's your risk versus reward.
Is it like a 20-minute strategy or?
Well, you're looking at a 1-minute anchored VWAP, right? Yeah. And then as soon as it gets above that and it mean reverts up on a sell-off, you're in. And then on a rally, you're fading the breakdown.
That's got to be good for your blood pressure.
I mean, listen, most trades are in the first half an hour of the day, so.
I tried day trading in like 98. I was the world's worst. I do not have the temperament for that.
Yeah.
And I was one of those guys where I'd get into a trade and then it would start going against me. And the three guys around me were like, dude, you got to sell it now. I'm like, no. I start reading about the fundamentals of the company. They said, I don't think you understand what we're doing here.
Yeah.
This is ticks, bro.
Yeah.
This is not about being right. And that doesn't sit well with me. I sort of can't operate that way.
We've known each other for 20 years, and you're still like, oh yeah, you like that stock? Why?
Yeah, no.
Why? Because I think I could sell it at a higher price. What do you mean, why?
You know what? It's not a character flaw. It's due to my superior intellect. I have to have the reasoning behind everything.
Yeah.
Even if it's fake, I still need something.
You sound like one of these like old, angry macro perma bears.
Bro,
you know,
I'm fucking 48 and I'm a perma bull.
No, I know.
But like
but the things you're saying, like how you're speaking, obviously you're being sarcastic, but like those angry perma bulls actually do think that.
Angry perma bulls.
Bears.
Perma bears.
Yeah, that their intellect is so far superior than the market.
Dude, I'm joking.
I know that.
JC, for as long as you know Josh, have you noticed that every single year he says, I'm effing this age? I remember when he was like, dude, I'm 38 years old. I don't have time for that. I'm 41 years old. I don't have time for that.
I'm getting too old for this shit.
Yeah, but now as you're getting older, you're like, oh, he was right.
I've never said those words out loud. I'm X years old.
Yes, but there are things that you now acknowledge that you're too old for. Like
I'm still feeling good.
I feel great, but I'm too old for games.
Yeah.
That's what kind of games?
Like games people play with each other. I don't play games with people.
Yeah.
I thought you meant like Call of Duty. I don't play that anymore either.
No. Like I don't do group texts. I remove myself from I'm like in 5 group texts. I used to be in 50. I used to be in group texts with people from college at a certain point, it's like, what the fuck are we even talking about anymore?
48.
What is this even
48.
about?
No, but you want to know something about Josh is that, he gave me a lot of advice over the years because he was like ahead of the game. Like he had his kids before me. Like he was just a little bit older in not just in age, but in other things too. And it's like all the things that dads tell you all are true, right? Like, as you become a dad, I mean, my oldest is 5, the twins are 3. So like, but all the things that you ever said.
Do you remember I used to tell you, let me say this like 10 years ago. You'd be like, yo, what up? I'm in Manhattan. What are we doing? I'm like, I'm taking the train home and taking my kid to Little League. And you're like, oh, I respect that. That makes sense. How many days a week do you do that? I'm like, pretty much 5 days a week.
Yeah.
And you're like, really?
Yeah.
I'm like, just you wait. Yeah. And now you're in the shit.
That's right.
You're in the shit for real.
No, it's all good.
I know. It's the best time of your life.
You want to know one of the best pieces of advice you ever gave me? Right? This is a good one. Because I think about this a lot.
Buy 6 Flags at 4 1/4.
Yeah, well, it was 3.5. It was like 3.5, but that's another story. It tripled. I thought I was Warren Buffett. It was just Josh getting lucky, as it turns out. But so I walk into Josh's office one day, and I was like, I can't like screw anything in. I can't hang a picture on the wall. Like I'm such an idiot. Like I can't do any of this stuff. And Josh goes, "Let me stop you right there. You go, you provide, and you hire people to do all that
That's
shit.
right.
Don't worry about it."
Yeah.
And I'm like, "Yeah?" He's like, yeah. Go make money. Don't worry about it.
Yeah.
I'm like, "Oh, okay." Let me tell you. So I think about that shit all the time.
What was the alternative? You're going to go to carpentry school?
Well, I'm in my early 20s, so like I don't know anything. So like now in hindsight, I'm like, yeah, I'm not fucking doing that.
That's
Josh
right.
says just pay someone to do it.
Your time is better spent reading, writing, researching, talking to people.
Candlestick.
Your time is not well spent learning how to screw in a light bulb. So,
thank you.
You're welcome. You're welcome.
How's Disney?
Listen, it can't be a bear market, man. I'm talking $15 hot dogs, bro. $15 hot dogs.
Go to Vegas. $30.
I was just there.
$30 hot dogs.
I was just there. $30 peanuts in the room.
I had a $16 Subway sandwich. It was so offensive.
That's gross.
So
in New
gross.
York, bro?
So no, in Vegas.
The last time I was in
So
the
gross.
last time I was in Vegas was with JC and Fami, and we went to Piero's, and a week later somebody tried to blow the restaurant up.
Are you serious?
I love Vegas.
I didn't send you that link.
No.
Somebody in the middle of the night went and lit the restaurant on fire. So I swear to God, a week after we went there.
Wow.
With,
this place was like a little DL. Like I could see how that would happen there.
It's Piero's was in one of the scenes with Sharon Stone and De Niro in Casino.
Get up.
What's that? Is that true?
Not that one, the other one.
Dude, that place was good.
Yeah. It was legit.
That scene where he's shaking the table.
Yeah, not the one where he busts her with Lester's, but maybe the one where she's like really hot.
I wouldn't do that.
Yeah. All right, let's get the show on the road. We got things to do.
All right, you know the drill.
All right, thank you, John. What episode is this, my friend?
This is How About Informant episode 225.
Today's show is sponsored by Public, the investing platform for those who take it seriously. On Public, you can build a multi-asset portfolio of stocks, bonds, options, and crypto. And now, generated assets, which allow you to turn any idea into an investable index with AI. It all starts with your prompt. From renewable energy companies with high free cash flow to semiconductor suppliers growing revenue over 20% year over year, you can literally type any prompt and put the AI to work. It screens thousands of stocks, builds a one-of-a-kind index, and lets you backtest it against the S&P 500. Then you can invest in a few clicks. Generated assets are like ETFs with infinite possibilities, completely customizable and based on your thesis, not someone else's. Go to public.com/compound and earn an uncapped 1% bonus when you transfer your portfolio. That's public.com/compound, paid for by Public Investing. Full disclosure in podcast description. Okay, 2 1/4.
Ladies and gentlemen, you are now rocking with the best investing podcast on God's green earth, episode 225. Super blessed. Whole gang is here. Daniel is back. John's in the house. Duncan, Nicole, fan favorite, returning champion, making his, I've lost count, appearance on the Compound and Friends. Y'all give it up for JC Parets. Let me hear it. Your hand's broken? All right. Guys, JC is the founder and chief technician of Trend Labs, a technical analysis-focused research platform. JC also authors Everybody's Wrong, where he delivers charts and actionable ideas on a daily basis. JC, welcome back to the show.
Thank you, guys. My favorite show to do in the whole world. Number one, easy.
We're really excited to have you here. So today's going to be fun because I know you have a bunch of charts that we're going to take a look at. And then I'm going to show you some charts that you may either like or be offended by. I'm not sure yet. But we'll do yours first.
If you bring me an arithmetic scale price chart, I'm going to throw it at you.
Something tells me I'm already in trouble. All right. I did want to. Can I play? I could play an Instagram, right, John?
Yeah.
All right.
Play an Instagram.
Yeah, that's old.
Is that what the kids do?
Dude,
these days?
he's 48. He really is 48.
All right. Is this working?
Oh shit!
I don't know.
Warren.
Who even uses Instagram?
I don't know
do.
if it's working. Oh, wait. I got it.
What year is
Hold on.
this?
The whole long-term capital management, I hope most of you are familiar with it, but the whole story is really fascinating because if you take John Merriweather and Eric Rosenfeld, Larry Hillenbrand, Greg Hawkins, Victor Agani,
Smart men.
the two Nobel Prize winners, Merton and Scholes, if you take the 16 of them, they probably have as high an average IQ as any 16 people working together in one business in the country, including at Microsoft or wherever you want to name. So there's incredible amount of intellect in that room. Now you combine that with the fact that those 16 had extensive experience in the field they were operating. I mean, this was not a bunch of guys who had made their money, selling men's clothing and then all of a sudden went into the securities business or anything. They'd had in aggregate the 16 that probably had 350 or 400 years of experience doing exactly what they were doing. And then you throw in the third factor, that most of them had virtually all of their very substantial net worths in the business. So they had their own money up, hundreds and hundreds of millions of dollars of their own money up, super high intellect, working in a field they knew, and essentially they went broke. And that to me is absolutely fascinating. I mean, if I ever write a book, it's going to be called Why Smart People Do Dumb Things. My partner says that it should be autobiographical.
That's Jesse's newsletter.
Yeah.
This might be an interesting illustration, and these are perfectly decent guys. I respect them, and they helped me out when I had problems with Solomon, and so they're not bad people at all. But to make money they didn't have and didn't need, they risked what they did have and did need, and that's foolish. That is just plain foolish.
All right, that's the GOAT. That's the GOAT. Warren Buffett commenting on long-term capital markets, long-term capital management, which was a prominent hedge fund that blew up in the late 1990s. And I think there's a lot in there, a lot to that. The first big idea is these are literally the smartest people there are working in money management. These are Nobel Prize winners, theoreticians, professional traders, asset managers,
pickleball players.
And it's a whole room full of them. It's not even like one guy making an error. It's a whole committee. I think there's a lesson in there that blow-ups can happen, and they probably will happen the more arrogant people are about what they think they're good at, is one. And then that second part, like needless risk. Risking all of them were multi-millionaires at the time that they were putting on the trades that melted down. What are your thoughts?
I think it gets back to something that, thank God, I understood, is that you don't have to be smarter than everybody else. You just have to be slightly less stupid. Mm-hmm. So that's number one. It's about understanding the flaws that we have as human beings so that we don't fall victim to a lot of the mistakes that other people do, right? We have to understand the way the human mind works. We have to understand those emotions when they come, recognize it, laugh about it, and then not do anything about it, not act upon those emotions. Okay. Now, there's a second element to that, which is where I come in, where not only are we recognizing our own human behaviors, but we are taking advantage of the fact that all the other humans, not only do they don't know that they have those human flaws, they don't even care to know, and they're just living their lives. But us as investors, we can exploit their flaws for our own selfish endeavors so that we can make money for ourselves.
Is there a such thing as being overly aware of those emotions and then having that be a limiting factor where you don't take enough risk or you don't trust your instinct enough because you might say to yourself, oh, here I go again, my hubris.
Yeah.
And then a huge winning trade goes by because you were so busy self-deprecating. Isn't that like also a thing?
I mean, we could talk about precious metals over the last few months, and every day it goes up another 4%, and I'm like, oh my God, like there's no way this can keep going. Meanwhile, I haven't sold a single precious metal stock, right? Because it hasn't hit our target, right? So it goes back to nailing down what you're going to do so that you're completely eliminating your brain from the situation. You're just following the plan. So what I think this morning or yesterday doesn't matter. I'm like, dude, there's no way this is going to keep going up. Oh, okay. Well, it doubled after I said that. So, you know, it doesn't matter what I think, right? Just follow the plan, stick to the plan. So I think that that's the big thing. And in terms of like, you know, an overabundance of information, you know, there's a specific groups that you want to fade. You want to fade. And if you could throw up slide 1, the new slide 1, I just added another slide because we didn't have enough. You want to fade.
I love this.
All right. Why don't we get into this and I'll tell you what the 4 fade groups are.
Okay.
So you're talking about smart people blowing themselves up in 1998. Well, Issac Newton, I don't know, pretty freaking smart. He blew himself up too. And for the same reasons that humans are blowing themselves up today. It has nothing to do with intelligence or that Issac Newton was the man. He's a human at the end of the day. So what happens?
Issac Newton was the man.
He was the man.
I think
Right?
I think scholars believe that he was one of the 10 smartest people who ever lived.
Yeah.
So, okay. It's very important.
So nobody's going to argue. Nobody's going to say, oh, that guy was an idiot, right? No, he's just a human, right? So what happens? So he starts, this is the South Sea stock back in the day. If you don't know the story, go learn about the story. Just one of the great bubbles of all time. So we're not going to go into the bubble. The point is, he starts buying it, right? Then he quickly doubles his money. Issac Newton.
This is in 1718.
Yeah.
For the people
This
not
is
looking
the,
at the chart.
This is the roaring 20s of the 1700s.
Of the 1700s.
So Issac Newton doubles his money. Nice trade. Not bad, Isaac. Not bad, bro. Right? And then, you know what I'm saying? Nice little double. And then all of a sudden, what happens? Newton's neighbors are getting rich. They're still in it. And now he's got the FOMO. He's like, bro.
So he doubles, he's out. And then the people around him that he knows he's smarter than are making even more money.
Yep.
That will make you insane.
Yep.
Yeah.
And so he's like, you know what? The hell with it. I'm in.
Oh, my God.
At the top. And then he blew himself up.
Yeah. Exits broke. We know that for sure.
Yeah.
Bro, you heard that story?
There's that famous quote that is, I think, misattributed to him. Somebody said that I can calculate the heavenly bodies, but not the madness of the crowd or madness of people.
It's probably made up, but it's
a great quote.
perfect quote.
It's a great quote.
I don't think he actually said it.
By the way, that chart kind of looks like silver. A little bit.
Yeah. Well,
Every uptrend is going to look like that. Don't even go there with me.
No. That's not an uptrend. That's not an uptrend. That's a vertical trend.
Listen,
that's parabolic. Is the message here? This is not a contest of who's the smartest. That's number one, right? And then the number two is comparison. My gains versus someone else's gains, and oh shit, I better catch up.
Being too smart might even be a negative.
I've seen
100%.
a million examples.
The midwit curve is real.
Yeah.
Mm-hmm.
One thing that Buffett didn't mention in that video, and it's sort of besides the point, but also relevant, they were levered 250 to 1. Probably like not a great recipe.
But that's the arrogance.
Yeah.
They wouldn't do that if they weren't thinking to themselves, we have the whole machine figured
and
out.
like, it's fixed income arbitrage. What can go wrong? Like, these things don't really move that much until they do.
That's right.
Right.
That's
so,
right.
So there's a couple of components to it. It's like, we know exactly what we're doing. Therefore, why 100 times leverage when we could be 200? Why 200? We could be 250. So that's one thing. And the second thing is just like, look at how brilliant we are. And the third thing is, why are we putting the pedal to the metal? Do we really need to make this much money? And of course, none of them did. Now they might. None of them did at the time. So I think those are really crucial lessons for investors. And I just thought that was an interesting thing to see Buffett pointing that out.
So it's two things. It's the internal and the external. If you could throw up the slide too, I just added one more. So it's the internal and the external.
Good luck today, John.
No, that was it. So, it's about recognizing our own flaws and then taking advantage of the others, right? For our own selfish gain. So to me, there are 4 basic fade groups. You have sell-side analysts, right? So they come with their own conflicts of interest. Of course, like, they're going to say something bad about a company, but they're working on an M&A deal. They're going to get a tap on the shoulder. And if you think that doesn't happen, I think you're crazy. So there's that. There's the career risk where, if there are 30 analysts covering a stock and they're all bullish and you're not, and you're wrong, you're going to be looking for a job, right? And it's not worth the career risk because little Timmy's private school and Martha's Botox and the country club and the whole thing, it's not worth it.
Call it hurting.
herding
Right.
mentality, right? Herding is very strong.
There's safety in the
100%.
Right.
So you have that. So we could take advantage of that for our own selfish endeavor. So you got the four. Is that me or is that you?
That's Josh.
Dude, what are we doing
My
here?
kid's got tonsillitis or something. I don't
Is
know.
this
what
your
the hell's
first
going on.
podcast?
Oh.
It might be. Amateur hour.
All right. Wall Street analyst, right? Great fade, particularly at consensus. Remember 3 years ago exactly, coming into 23, Wall Street was at a consensus that the stock market was going to fall in 2023. As it turns out, the NASDAQ doubled instead, right? Classic. It's a better signal when they're all bearish versus when they're all bullish. If they're all bullish, that's standard. Herding, S&P is going to go up 8 to 10%, even though it never does.
That's not the fade. The fade is when they're all bearish.
Yes.
Okay. It's asymmetric. It's not the
100%.
same thing.
Not the same
Okay,
thing.
I like that.
Asset managers. These are hedge funds, asset managers. These are historically the worst investors of all time. We have the data, right?
How do you measure that?
That makes
What
perfect sense.
What do you mean?
Well, in the futures market in particular, right? So you're seeing futures positioning. You're looking at the speculators, the asset managers. When they're at a consensus, do the opposite, right? Like, for example, they had a historic net short position in Russell 2000 futures this summer. How'd that work out, right? For example. But we can go, it goes on it right now.
Are those hedges though?
No.
Is it ever good if they lose money in the Russell futures? Maybe they're hedging
No, there's
wrong positions.
there's this thought process that hedge fund managers hedge. No. It's just a fugazi. They're in.
Okay.
Right.
So those are concentrated bets, not hedges.
Yeah.
Okay.
Asset managers, fade them at consensus. Journalists, because they're so good at their jobs, right? Journalists are not traders. In a lot of cases, they can't afford to be. In a lot of cases, they have the money, but legally they can't
They're not
because
allowed.
they're not allowed,
Conflict.
right?
Right.
So they're not traders. Fine. They're really good at what they do. What do? They see what the narrative is. They're there to sell newspapers, magazines, right? So they want to see what people are talking about and then write articles about that. By the time the journalist figures that out, by the time they write their article, submit the cover, all of that gets approved. By the time that hits the shelves, it's too late. Take the other side, right?
Like, because they're writing about something that already happened and explaining it to people, and they do a really good job at that.
Mhm.
But that is not the same thing as trying to find a prospective opportunity.
That's right.
That hasn't happened
But
yet.
within journalists, it depends on the journalist. For example, Barron's only writes about the stock market, right? They're pretty much on top of it. Now, of course, there's been some magazine covers, but like you can't fade every Barron's cover. When the Economist is putting Lululemon on the cover, that's like, wait, what? Why is the Economist talking about Lululemon?
So, all right, I like
Forbes, Newsweek, Time.
Right.
I like that distinction where, look, if you're fading everybody who's writing about stocks everywhere, you're fading some people that focus on stocks 24/7 and they understand everything we just said.
Yep.
That's not the answer. I do agree with Michael. When a stock story crosses over into the mainstream media, you're in the eighth inning.
Or a theme or anything like that. Like how many AI covers did we have at the end of the
every
year? How's that
investor
work
is
King
doing
Dollar.
X.
Right, that was an
The
Economist
dollar,
story. King
yes.
Dollar.
Yeah.
Yeah.
We talked about it on the show.
Right,
and
right.
again, it's not like we're just fading magazine covers. It's like when it lines up with price and it lines up with futures
Well,
positioning and other things. That's when you
The
put the trade
Time
on.
Person of the Year is like the 7 most important AI CEOs
Perfect.
a month ago. It's beyond perfect.
Perfect.
Okay.
And then the fourth one is economists. And the economist is easy. Why are they wrong all the time? It's very simple. By design, they ignore what actually is happening in favor of what they think should be happening based on information that may or may not have happened. Right? So
Wait,
are you surprised that they're wrong all the time?
say more?
Okay, so economists, what do? They ignore what is happening. The
Okay.
prices of assets
Okay.
is what is happening
Yeah.
in favor. And I know you have economist friends, so don't get sensitive about it. It's just what it is.
Yeah.
He does, right? So you got,
So do you.
do I?
Maybe.
Maybe. I don't know. Don't tell
Okay.
anybody.
All right.
So what are they ignore what is happening
Yeah.
in favor of data that may or may not have happened because we know it probably will get revised, right? And ignore it's like pay no attention to what is happening,
Right.
right? So if
So
you're
not fade economists on the economy, fade economists on when they start talking about the stock market.
hell yeah.
Yeah.
Hell yeah. All
Okay.
right, you guys ready? All right, so those are the 4 fade groups. Simple.
Okay.
We don't have to complicate things. So there's a lot of information out there. There's a lot of noise. Focus on these, do the opposite, especially when they all agree.
Okay. All right. I don't hate that.
I think, and we're painting with a broad brush. There's
Yeah, of
some,
course.
there's some awesome
It's not every
economists.
single person.
Obviously.
I know sell-side analysts.
yeah.
I know asset managers and journalists, and maybe I know economists. I don't even know.
There's an economist somewhere listening to us saying "F***ing fade podcasters."
Yeah.
For sure.
For sure. And then what happened to that guy?
Fully justified.
Whatever happened to that guy who was hating on the bloggers back in the day that nobody ever heard from again?
Yeah,
Right? How'd that
exactly.
work out for him?
Not great.
Hating on bloggers.
Dude, he was hating. Josh went off. We don't have to go there if you don't want.
There was a guy, I'm not going to say his name. He sucks. He was a CNBC guy in like 08, 09, 2010, and blogs were a brand new thing. And he was like forced to react to all these stories that were happening on blogs like Barry's site and Zero Hedge and, you know, like all the stuff.
The Reform Broker.
Yeah. So he would do a segment, I think it was nightly, Blog You. And he would just go off on somebody that was like from Twitter. And he didn't make any friends. And I don't know if he was right or wrong. I forgot what he was saying, but that was a thing.
Okay.
It was a moment.
Don't fade the bloggers. I'll tell you what, they got followers, right? I mean, myself included. I mean, I'm there now. I wasn't then, but I'm there now. All right, let's get into it. You want to talk markets or what?
Yes, let's do it.
All right,
let's do it.
So, speaking of economists, the economists tell me that U.S. GDP, 70% of that is consumer. So I don't know what a GDP is, but 70% of 70% of anything is a lot, right?
Yeah.
So we're seeing new all-time highs in consumer discretionary on both a market cap weighted and an equally weighted basis. Is that bearish?
I don't think so.
Is this heavily influenced by the stocks that are in the index, or it doesn't matter really? The biggest market cap stocks in the index.
So in the discretionary, Tesla and Amazon are each over 20%.
That's why I'm asking.
Right? So fine. People are like, oh, it's just the big ones. Well, the equally weighted consumer discretionary index that completely eliminates those stocks out of the equation altogether is also making new all-time highs.
Yep. Okay, that's the signal. Right. How many people fail to correct themselves and look at the equal weight version of the index for that confirmation?
Humans are lazy, bro.
Right. It's like doesn't take much to double check. If you just look at an index and say, "Oh, it's all Apple and Microsoft." Well, wait. What does equal weight tech look like?
Right.
Not everybody will do that.
And what does small cap tech look like? And what does mid cap tech look like?
Are you less bullish if you don't have that confirmation in the equal weight?
You know, it's funny because, well, first of all, on the consumer discretionary, consumers have been quite the underperformer of this bull market, right? It's been technology, industrials, financials, communications. It's been the other offensive groups, not discretionary. So looking at discretionary underperforming, if there were others in that group underperforming, that would be a problem. But because it's the only one, we've been betting on rotation into it.
I'm going to sort of say something that you probably don't care about, but I actually think there's a huge flaw with consumer discretionary being in a sector, because the bifurcation between travel and restaurants last year is the reason that the consumer stocks, quote unquote, underperformed as a sector. The reality is they're not really a sector. People don't necessarily choose between I'm going to go out to eat versus I'm going to go on a trip. They probably can do both if they feel like it. The restaurant stocks have been horrible. A lot of consumer discretionary stocks have been horrible. The travel stocks could not have been better. Even like I know airlines are not in it, but like the Expedias of the world.
Yeah.
So it's like,
but airlines you could argue should be in it, and Delta and United Air are making new all-time highs.
And then here's the other thing:
and Walmart is not in it, and it's making all-time highs.
What if I just take consumer discretionary and throw it out and look at Visa and MasterCard instead?
Yeah, right.
I like that signal better.
Well, Jeff Mackey would agree with a lot of the things you're saying.
Yeah.
Right. I talked to Jeff a lot, and he's like Uber's in the consumer stock, Apple's a consumer stock, Google's a consumer stock.
Right.
That's so weird.
So just go with Visa, MasterCard. Let that. What are they saying? What are their share prices saying? I'd rather know that than start cherry picking. Like, what does Applebee's think of the environment? Who gives a shit? They might be doing really well or really poorly relative to their peers.
See that Chili's though?
Yeah, great. Okay, I like that concept.
Okay, but meanwhile, look what's happening. Consumer sentiment is actually at the lowest levels ever. So you got the humans are
pure politics.
Yeah, maybe fine, but the humans are very upset, and the price of assets is making new highs.
Yeah, these are different people. The people that are upset don't own stocks.
Yeah, well, I'll tell you what. In 1999, when this was at highs, the stock market crashed from there. And in 2019, when this was at highs, we had 3 major corrections, including a full-on bear market and a historic market crash immediately after they were all super giddy. So yeah, these might be different people. It might be politics. I hear all that shit. All I know is these people are angry, and the consumer stocks are making new all-time highs. I couldn't think of a better combination.
I can't believe this hasn't bounced.
Well, I guess what this will never be where it was. This is a secular bear market.
Yeah,
I agree, because the top is the advent of the internet. The internet makes people miserable.
Nobody answers questions. People are miserable on the internet. This will never be over 110 in our lifetime.
I guess we'll see. My point is the humans are angry. and the stocks that represent
the humans.
Humans
the
are
humans are
angry.
angry, and the stocks that represent the behavior of those humans are making all-time highs. I love that combination.
Okay. I like that's a good counterpoint to the people that are talking about bubbles and euphoria and all these things.
We'll get there.
Yeah. Okay.
Okay, so let's do a little. Let's have some fun here. We're looking at MicroStrategy hitting new lows more recently, and this was, look at that top right when that cover came off. If you want to go to the next one, zoom in on that cover. You know, right there, the Bitcoin alchemist,
Ooh.
the volatility virtuoso,
Michael Saylor.
Michael Saylor. So just look at where that peaked. Right.
That's January 30th, 2025.
Yeah.
That's a year ago next week.
Yep. So that's not a coincidence.
What a
And do you have a
shit show.
relative chart, JC?
Settle down. Here we go. So MicroStrategy relative to Bitcoin.
Oh,
So brutal.
So this is a ratio of the price of MicroStrategy, which is doing the Ponzi with the Bitcoin, and then the actual price of Bitcoin, right? And then notice when it peaked. It peaked on November the 20th of 2024. Does anyone know what happened the day before that?
the coronation of Donald Trump.
No.
Wait, the day before what? I'm sorry. I was thinking. you said
November
it's-
the 20th of
Thanksgiving.
November the 20th of 2024, the ratio between MicroStrategy and Bitcoin peaked. In other words, up until November 20th, if you wanted to put on a leverage long position in Bitcoin and make money in Bitcoin, MicroStrategy was the preferred vehicle
Oh,
over
the
IBIT.
ETFs.
No, that was January 24th.
Oh, that was
that already
earlier.
Yeah. What happened that day?
November the 20th, 2024 was the peak, and it crashed after that. The day before that, November 19th, was the day that options started trading on IBIT.
Oh, that's good.
Ah,
Oh, well, that explains
price,
it.
Price discovery.
Dude, no. It's the opposite.
It's not necessary
You
anymore.
don't need this anymore.
You don't need it
It's
anymore.
superfluous. And by the way, it's not a Ponzi scheme, literally.
I'm not smart enough to understand. I don't care. It's a
Yeah.
Ponzi. I hope it is. It doesn't matter to me at all.
Right.
So my point is, not only does it not matter, I got long yesterday.
You're long
The
MicroStrategy.
Ponzi. Yeah, throw it up. There it is.
Maybe it's a false breakdown.
You're short the Ponzi. You're
No, he's long. He's long.
Long the Ponzi.
It's not a Ponzi.
Okay,
Yeah, I
fine,
know.
great.
Yeah. No, but he hopes
Doesn't
it
matter
is.
whether it is or not.
Jesus
He
Christ.
hopes it
It's
is.
a digital assets treasury corporation.
Yeah, sure.
Okay. So you think we're seeing a false breakdown in strategy?
So, dude, I'm telling you right now, how long have you known me? Every year it's the same shit, man. At the end of the year, between that Christmas, New Year's, you got the B squads on the desks. You got like there's no liquidity.
Tax law selling. They're puking stocks up.
There's just low liquidity, weird shit happens.
Yeah.
And then you get back to work and they squeeze them higher. And
Okay.
going into that week, I'm like, crypto, Coinbase, MicroStrategy. I didn't know. I had to see confirmation, and then we got it. So I got long yesterday, pretty aggressively so, I might add. Let's see how it works for me. I'm going to keep a tight stop.
You
Very tight
you
stop.
like this the way this one looks because it's a false breakdown that's now recovering versus the Coinbases or just buying a Bitcoin ETF.
I'm in Coinbase already also.
Okay.
But I put on a MicroStrategy position yesterday, which I hadn't in a long time.
Okay. All right.
And then if you want to throw up the Bitcoin,
Wait, JC, what does a tight stop mean to you? I'm curious.
well, I'm using a time stop because it's either going to go or it's not. And if it's going to go, it's going to go now. So I might be out of this tomorrow
Wait, is
or
a
next
time
week.
stop like a mental thing?
Yeah.
Oh, okay.
Yeah.
I like it. So
Like
if it doesn't work
like
now,
you're saying,
you're
this
out.
is,
I
I'm
love
in
it.
this for two,
I love
3
that.
days
I love
max.
Well, I'd like to be in it for 3 months, but if it doesn't go in the first couple of days,
Yeah,
I'm
I got
out.
it.
I
I got
love
it.
it. Right,
Yeah.
because if trades don't work immediately when you think they should,
Not all of them, but this one definitely.
yeah, okay.
This one's either going to go or it's not.
This
right?
looks good to me.
So there's your anchored VWAP from the highs last year. You know, you're looking at 97. If we're above 97, the squeeze is on.
I mean, this is like I don't know how meaningful is that moving average? Is that a 10-day?
It's a VWAP.
That
that's
is
the
an
VWAP
anchored
that we're looking
volume
at.
weighted
All right.
average price.
All right. So they're coming for the stock. They're coming for their coin.
That's right. That's
Okay.
right. So funny money, long. And then I just want to remind everybody that we've seen this story before. There's Fat Fred Savage right there on the cover of Forbes. And then remember what happened?
Didn't you make that
Yeah,
up?
that's a Josh line.
Yeah.
I did.
Yeah.
So Sam Bankman-Fried, Fat Fred Savage is
Yeah,
funny.
That was you.
Yeah. It's funny me calling anyone that, but okay. Got it. What is he gonna do about it? Nothing.
He's playing chess with Diddy.
Yeah. I'm not worried about it.
So,
All right. Go ahead.
So my point is that we've seen this before, right? And we'll see it again. So it's not like funny, ha ha, not like, no. Pay attention because we will see this again. This is not like a one and done. This happens again and again and again. I probably have the greatest collection of magazine covers probably in the world. I don't think anybody has a collection like mine. I have magazines that go back to the bicycle bubble of the late 1800s. I got some shit, right? And it's the same story again and again and again.
What? The rise and fall of a theme.
All kinds of things. All kinds of things. All right.
You're right. That is one of the constants forever and ever and ever. Will never not happen.
I hope they
I'm going to bring them. Next time I'm on the show, I'm going to bring a bunch of magazines and we'll look at them.
Awesome.
I have some good stuff. All right. So this was in November. So this was very creative. The best ones usually are. So this one is a guy doing a yard sale down the mountain. And then they turned his skis into red arrows pointing down how the markets could topple the economy, Josh.
What does that mean? Like if the markets get crushed, the economy will get crushed with it?
Notice, hold on, go back. Notice the map of the world on his ass. That was good, right?
Look,
It's really good.
It's snow comprising the continents.
So good.
I wouldn't have seen that if you didn't point it out.
I know, so good. Anyway, so the rule of thumb is whenever there's a chart on the cover of the magazine, you buy stocks.
Yeah.
Right? So I polled all my associates and we agreed that was a chart, technically, with the arrows.
Yeah.
And so here's the returns of stocks since then.
Oh, micros.
Micro caps up 15%, trannies up 12, small caps up 12, mid caps up 10.
We don't say trannies.
We do this every time.
Transportation
Every
Americans.
time he's on the show.
They don't like it.
Transportation Americans.
Yeah,
Right.
disrespectful.
So stocks absolutely ripping since then because of course they are, because if these British journalists are telling you that the stock market is going to topple, it's probably going to be the opposite, right? And sure enough, it was.
This is unbelievable, the unanimity with which every one of these things proceeded to work.
Is it surprising to you?
Yeah. So I guess the Economist has to wait for Q2 for markets to topple the economy. Oh, here we go. So the journalists weren't wrong. It's just a bubble. That's all.
So Ritholtz is slipping into my DMs.
Oh boy.
You know?
Oh boy.
He does that late at night sometimes.
Yeah.
And so we're talking about this one. What do you guys think about this one?
Beware the bubble, how to survive the year ahead. What day did this come out?
Last week.
This is last week?
Yeah.
Is it even worth commenting on what they mean? Which bubble?
AI.
It's just
It's AI.
It's just a bubble. All the bubbles.
It's just everything is a bubble?
All the bubbles, Josh.
So for me, the cover's not enough. I have to read the spiel.
Got it. Of
I have
course
to see
you do.
what they're saying.
Yeah. He buys the Playboy for the articles. Yeah.
No, I just have to. I can't read something if I don't even know. They're not even saying what the bubble is in. It's almost like this cover will be wrong or right no matter what, because they're not saying what the bubble's in.
That's right.
So-
Well, I gave a presentation a couple of months ago, I think in Vegas, and I asked everybody, raise your hand if you think we're in a bubble. And the entire room raised their hand. And I'm like, I didn't
Really?
even mention an asset.
Who's the audience?
I don't know, like rich investors.
Right. Raise your hand if we're in a bubble, and it doesn't even matter.
Doesn't matter.
Okay.
It was great. Okay.
What do you think most of them think you mean? Are they thinking like NVIDIA AI?
Probably.
Okay. All right.
Yeah, probably.
Okay.
All right. I mean, listen, anything that's going up that you're not in is a bubble, right?
I think there are a lot of very well-known stocks that are not in tech that are definitely, if not in bubbles, on their way. Costco, Walmart, these should not be 40 times earnings.
Oh, here we go. Earnings.
Those
I
are not
can't.
bubbles. They're
On
overpriced.
their way.
Dude, 90% of Americans live within 10 miles of a Walmart. How
Costco-
about
I'm
that for
not
a
saying
fun
it's
fact?
not a good company.
Costco can't be a bubble.
All right.
I'm saying historically, people didn't buy those stocks at that expensive of a price without getting their asses kicked eventually.
Don't worry. This time is different.
Fair enough. All right. Go ahead.
All right. So last year, a year ago today, check the tape. I told you that international was going to outperform the United States and the dollar was going to get smoked, right?
Yes.
And you said that I hope you're right because that would be really good for our industry,
Yes.
as in financial advisors.
And it
that would
was.
be really good. So I'm curious.
It was.
You said that then. Was it and how?
Well, for the first time in a decade, my advisors don't have to explain to clients why they own anything other than the S&P 500.
Or the cues?
Am I overstating it?
No.
Okay. Like that has been a conversation, not every client, not every year, but it's like, what is the point of emerging markets? What is the point of Western Europe? What is the point of Japan? Different people at different times. Nobody's asking that question right now. So nobody who stuck it out.
That's right.
Yeah.
So emerging markets ex China up 35%. Emerging
amazing.
markets with China up 34%. All country world index ex North America up 32%. IFA, which is a lot of Europe and Japan, up over 30%. go down the list.
If
Right?
you pull this back 15 years and just look at cumulative returns, that trade could have like 5 more years to go and still not get to where the S&P, and it may never. I'm not telling you that'll mean revert and you'll get those types of returns, but like for people who think they missed it, what do you think on the technicals?
I agree wholeheartedly with you that, I mean, this was a long time of the other side.
Yeah.
So
15
there's
years.
It's 15 years.
and we don't need to like if you want to see what all these countries look like, go watch the last episode I was in the summer,
They
and
look the same.
we went through except higher and
Higher.
more to the right,
Right,
Yeah.
right?
right,
But
right.
all these countries are up: Latin America, South Africa, Asia, Southeast Asia, all across Europe, up and to
India,
the right.
Japan, China.
I love that
now.
line. Higher and more to the right.
Yeah, higher than they
more to
were
the
in the
right.
summer and more to the
Yeah.
right, right? So the United States put up historic numbers, 20% year for the NASDAQ, 17% year for the S&P 500, and the U.S. was one of the worst countries on the planet.
Yeah. And that's like, even with all the AI that people were saying there's no AI stocks in the, like, right? Like Europe has ASML, that's it. And
S&P.
well,
Is there a plot? Is this an advertisement mid show?
Oh, no,
Let's
so
go.
I dove into this in our chart.
kid put a banner ad into the
Amazing.
Yeah, so this is
Amazing.
brought to you by our sponsor, Chart Summit 2026. No, I mean, because I dive into all of these charts.
You're the only person that this is allowed for.
Well,
All right, go.
go download the deck. Go
I'm gonna-
download the deck from the presentation. You have friends on this
We
list.
did.
Yeah,
lots
I'm
of
gonna
friends.
see Katie Stockton in 45 minutes from now.
Well, tell her I said what's up.
I
She
will.
was great.
Yeah.
David Lundgren, Frank Capillari, Straz and I gave a great presentation. Go download the deck. Check it out.
This is actually a pretty damn good roster.
I
How'd you get
know.
all these people?
Drinking buddies.
Is
Yeah.
that Max Kellerman on top right? Who is
Yeah,
that?
Max Kellerman talking about boxing. John Netto, Market Wizard. So you could download my deck and all the other decks and watch all the presentations. It's totally free. So go check that out.
All right, chartsummit.com. All
Yo.
right, so these are, in your opinion, like some of the more interesting technicians who made presentations.
I mean, listen, Katie's great. Frank is great. Netto, Lundgren, they're all fantastic. But I got to tell you, me and Straz's presentation was pretty good. Let me tell
did
you.
any of the technicians disagree with what you guys are telling people?
People weigh different things more heavily and lighter. Katie uses a lot more oscillators than I do. For example, she uses the Ichiro clouds and all that stuff.
She's a DeMarc person, too.
She's a DeMarc. Lundgren looks at things from a different perspective. Frank Cap as well. So, check it out. Enjoy it. Ryan Dietrich as well.
Yep.
All right. So I don't want to get into all of the different international markets and everything like that. We've done that before. We go over it on the presentation. Go check that out there. This is the big one. These are the assets throughout 2025 and the returns. Bitcoin was actually down. Bonds flat. S&Ps put up record numbers with the Qs and just massive underperformers. Look at silver, 150%.
Why are you saying record numbers? What do you mean by that?
70% return in the S&P 500, double the annual average return. Yeah, I'd say that's
That's nowhere close to a record, but it's a good year.
It's not a record amount
Banner
of
year,
gains,
banner year.
but
Good year,
it's a better year
It's a good
than the
year,
average. Yeah, of course.
a great year. No one's going to say it wasn't a great year,
It's a great year.
but underperformed practically everything else.
Look at this though. Silver up 150%, gold up 65, emerging markets 34, developed stocks 32. Like that's where the real money was made last year.
Yeah.
It's obvious.
Yeah.
So it's too late. My barber asked me this morning a haircut from Dominic,
How early do you get a
the
haircut?
Belmore barber. He wants to know if he should buy more silver.
Seriously?
Yeah. So he said I'm hearing it could go higher from here.
Are you making a joke? Or
I
you
swear
okay.
on my life. And I said Dominic, it definitely could go higher from here.
Yeah.
I'm not going to be the one that tells you,
That's right.
but just understand, like it was 16, it's 90. You
Yeah.
know what I'm saying? Like it's not early. So I mean, I don't know what to tell anybody.
We'll get to the silver in a
All right.
second. Let's stick with the stocks for right now. I just kind of wanted to put things in perspective. Look at the industrials and the transports. Both of these indexes are making new highs. These indexes go back to the late 1800s. They've never been higher, closing at all-time highs together.
That's so bullish.
So it's less of a signal. I'm getting, emails from, journalists and stuff like that. Like, oh, big signal. It's like, no. It's not so much a signal as it is confirmation.
Yeah.
Confirmation of what? Confirmation of all the other things that are suggesting and have been suggesting that we're in a bull market. This just confirms that all those things are in
Can I
fact
ask you
that.
something about Dow theory though? This is like anecdotally what I find. When it is in the favor of the bulls, people will point it out. And then when it's not, because transports are doing badly, people just forget about it. Like,
Yeah.
who cares? Do you get that sense also?
I feel like just nobody cares, and I'm the old man in the room telling you that this is the most important thing that you need to be watching.
All right,
And-
because I want to point out we had a really great run of years where the S&P was making highs or the Dow was making highs and the transports were not. And people like me very cleverly substituted the stocks.
Yeah.
And I would say semis are the new transports anyway.
Yeah.
Don't care that the airlines don't look good. And like the markets did great. Like it didn't matter that we didn't have that confirmation, I guess is what I'm trying to say. Now we have it. Okay, convenient.
These divergences come at peaks like
All right.
regularly. Even
All right.
before COVID, trainings were already rolling over. Look at the
It'll never change.
look at the New York Stock Exchange composite making all-time highs. These are the stocks that trade on the world's most important exchange.
Yeah.
You know how many mega cap tech stocks there are on the New York Stock Exchange? 3. United States mega cap tech stocks, I should say. You got IBM, Salesforce, and
Cisco?
no, IBM, Salesforce, and there's one more, Oracle. Those are the only 3 mega cap tech stocks on the New York Stock Exchange. Meanwhile, on the NASDAQ, you got NVIDIA, Apple, Amazon, all those others. Taiwan Semi also trades on the New York
Great
Stock
numbers
Exchange.
today.
SAP, Novartis. You got over a third of the New York Stock Exchange is international companies. You're getting a lot more cyclicals there. You're not getting this mega cap tech exposure that you're getting in the NASDAQ. The New York Stock Exchange is, to me, the best universe of stocks in the world.
Okay, that's obviously not bearish. I don't know if it's necessarily bullish.
Oh, wait, Jason, let me ask you a question. When people say to you, I am uncomfortable, I am leaning bearish because everything is working, what do you say to that person?
I would say go back and study history.
Meaning?
Meaning the best time to buy stocks is when it's making new highs. We have the data, we have the math, right? We know that asset prices trend. Like there's a lot about the market that we don't know, but there's a few things that we do know. And we know that asset prices trend. So if you're constantly fighting trends, then you are the sucker, right? You want to be the house.
Asset prices don't oscillate.
Right.
They don't. It's not up, down, up, down, up, down. They're going up or they're going down or they're doing nothing.
Right,
persist.
If you
Yeah.
if you are the type of personality where you think this is as good as it gets, you will not make money over time.
I forget who said it the other day and said, you know, if you want to manage money, you want to manage a portfolio, you better be comfortable with buying things after they've already doubled. Because if you're not going to last.
Right. Because there's a reason why something's doubled.
Yeah.
And you'll find out later.
And you're not smart enough or informed enough to know yet. And you
Yeah.
may never be, by the way.
Right. So this is the problem with using intuition in the markets. It's like, it's so obvious that nobody wants to buy something that was just 5 and now is 10.
But you know what's so funny about this? Like, when I talk that the market is bullish and people accuse me of being bullish or naive, it's like this, I'm not giving you an opinion of what I think will happen in 12 months. I'm describing what is happening today.
That's right.
And objectively, if you're fading every episode when we're bullish because the stock market is bullish, you're not gonna make any money.
Do you know, we launched our RIA in September of 2013, and it's been a long time, but somebody once sent me the tweet where back then, people used to go on this thing called Twitter and announce stuff. I tweeted a link to my blog post announcing the new firm, or maybe it was Barry's, one or the other. Somebody sent me this, and like there were like 50 responses. Congratulations, so happy for you guys. But like half the responses were top. 2013.
Yeah.
Where was the Dow at 18,000?
That was the end of the
Yeah.
lost decade. Remember?
Yeah.
They
Top.
were talking about a lost
Top.
decade. We were just breaking out
Top. Barry and Josh just launched an RIA. Top. Really?
Yeah.
Top? Sure.
with like 100 million.
But
like, you know,
the reason why they were
60.
saying that is not
60.
they weren't saying that because like they're making fun of us, they're teasing us. They're saying that because in 2013, the market had finally come all the way back to the 07 high after having been cut in half. That's why they're
and 2020 and 2000.
right. You
high.
have to buy tops.
Yeah.
Because they're probably not tops.
That's right.
It's very hard to do.
People think that the top of the chart means that there's resistance.
Oh, well,
It's the opposite.
Well, people are out of their fucking minds. They
It's
think
not.
it's a personal top for them.
Yeah.
They think, here we go again.
Yes.
Yeah.
Right. Like I'm gonna top it by
Yes.
buying.
Just my
Right.
luck.
Right. Of
Like,
course,
you're
I
not,
buy.
you're not that important.
So to me, it's a market of stocks. So we look at the S&P, the Dow, the NASDAQ. You know, we look at the
Show me the-
Russell 3000. It's a market of stocks.
Yeah.
at the end of the day.
I know you've got a ratio of the smalls to the bigs.
Yeah, I'm getting
Can't
there.
wait.
I'll get there. So here we're looking at the percentage of stocks on the New York Stock Exchange above their 200-day moving average, hitting new 52-week highs yesterday.
So that also happened in 2021, though. That's like not always great.
More stocks in uptrends is not a bad thing for the market.
But it's not always a great moment to buy. That's all I'm saying.
On average, it is.
All I'm saying is that
It's not always 2021.
hang on.
all
I
I'm
get
saying
it.
is these lies that they were telling you in the fourth quarter about how it's weakening breath and market deterioration, it was just sour grapes.
Yeah.
What they were saying, to quote Jeff DeGraff, he called it sour grapes. He was right. It's just that the concentration of returns up until that point was so strong. That doesn't mean it's weak market breadth. It's that the concentration of the best stocks.
Amen,
Yeah,
sister.
yeah.
It's two different things.
Yeah.
We know that the average return 1 year later is higher at an all-time high than on all other days.
We know.
So we know that for a fact. So yes, obviously, not always. Obviously, and also, most of the time crashes don't start from all-time highs. And if this is the top right here today, and the market weakens and it starts to deteriorate, we see distribution, we see selling more 52-week lows, we'll see it.
People are like, oh, 1987
You
came
could
out
change-
of
you could change
You
your
could change your mind.
Yeah.
People are like, oh, 1987 came out of nowhere. No, the market peaked in August. The crash wasn't until October.
You know what else people assume? That like the typical investor is a lump sum investor. Like, all right,
I'm
here's
never-
everything.
right.
Putting it all in today.
But JC, say this loud. Stocks crash from oversold conditions. Stocks crash when they're in downtrends for the most part.
Yeah.
They don't happen overnight.
Yeah, that's true. Yeah, that's right. Yeah, that's right.
Let's keep going.
So here's a really interesting one. So the NASDAQ hasn't made a new high since October, but this is the NASDAQ 100 QQQ. But NASDAQ stocks 101 through 200, which is the NASDAQ Next Gen
I
100.
don't even know what is this. This is an index.
This is 101 through 200.
This is like Zoom,
This is the next 100.
like the
Why don't
smaller
they call-
tech stocks,
Oh, that's it. So it's QQQJ. It has an
QQQJ.
ETF.
like Peloton. Like what's in here? I'm curious.
Have you ever looked at this?
Yeah. Back in the day.
So these are the next 100 names. So you're looking at companies between $20 and $40 billion in market capitalization.
So, all right. So these are like big tech stocks, not big enough to be in the NASDAQ one. This could be like Datadog, or like I'm trying to think like
Here, I'll
what would
tell you
be.
right now.
So you're gonna get
here we go. SanDisk, eBay, Fiserv, Teradyne, United Airlines. That's weird. CoreWeave, Expedia, Kimberly Clark. There's some weird shit in the NASDAQ these days, but that's it.
you're getting 4 times the healthcare exposure. So a lot of these biotechs are not big enough to be in the NASDAQ 100. So you're going to get a lot more healthcare here. So that certainly
Okay.
helps.
Okay.
Dude, how weird is this? Dollar Tree and Ulta and United,
There's a big trend. Like
It's equally weighted, too.
Walmart switched from the New York
yeah,
Stock Exchange to the NASDAQ.
they're all bouncing from the NYSE. What's going on?
So they want to be seen as growth companies,
Yeah.
not as blue chips. That's like
NASDAQ,
that's the wave.
NASDAQ's got the crown.
Yeah, I don't think so. So the point is just because some of these big ones aren't working doesn't mean that tech stocks are not working. So what's
What?
hilarious? So this guy Ron DeSantis, right? My understanding I think he's the governor of Florida or something
Correct.
like that.
You
right?
are correct.
So this guy's talking about market breadth, talking about how it's the Mag 7 economy and everything like that. A funny thing happened that day.
Is this real?
A funny thing happened that day. That was the day that the Mag
God.
7 stocks peaked on a relative basis and have gone.
Can you read the tweet?
You want to read the tweet?
Yeah.
The
you read it.
Magnificent Seven economy. Has there ever been a time in which the market was as skewed towards one sector and really one aspect of one sector as it is lately? So funny thing
October
happens.
29, 2025. Thank you, Governor.
So funny thing happened. So not only was that not true, right? He either didn't bother to count or he was lying. Either way, not acceptable. Since then, practically every stock is going up except those.
Yeah, he
right?
should revisit that tweet.
Yeah.
What a
Follow up.
chart. So, do you think that we're on false
that's
breakdown?
great
Are we on false breakdown watch? Or you think that it's got lower lows?
Here, go to the next one. So what we've seen since then, the NASDAQ has yet to make a new high, and technology has massively underperformed in that environment. But, and I like big butts. There's a big butt. Throw up the next one. But semiconductors making all-time highs on a relative basis. How bad could it be for tech if semis are still rolling?
They're gonna
It's a
come-
software issue. It's a mega cap issue. But if semis are rolling, how bad could things
So
be?
you're buying the weakness in mega cap tech.
I personally, I bought Ondas recently,
I don't know
but
what
that's
that
like
is.
It's small communications equipment.
I'm talking like Microsoft. Like, are you buying the weakness of Microsoft?
I am not. I have not
Microsoft
yet.
looks heavy.
I am not yet. I think that this is going to be a process.
Meta looks lifeless. Too.
I want to look elsewhere.
Microsoft is worse than Meta.
Yeah.
So let's talk about where I do want to look, right? So go to the next one. And as I mentioned, the world looks great. You know, it's not a bull market for America. It's a bull market for Earth, right? The planet that we live in.
Bro, no
Earthlings.
No tiny Lithuanian stocks today, please.
No. We're not going to go do this country thing.
Okay.
Check the tape. Go back to when I was in the summer for the 200th episode, and then all of those are just higher and more to the right.
Yeah.
So we don't have to do this again. The world's making all-time highs, and if you exclude America, also still making all-time highs. We can move on. All right. So what are we going to buy? So this one, to me, I think this is a big chart right here. Throw up the small caps there on a relative basis. So this is the Malachi Tony market, is what I call it. Just give the ball to the little guy and let him run with it. You know what I'm saying?
Shout to Tony.
I did this on.
You gotta get him on the show.
I would love to. I don't know what we would talk about, but go on.
Anything.
Talk about small
I did
caps.
this
He's
this
incredible.
week. JC,
Yeah.
I'll make the case for this ratio, the 2000 versus the large ones. That's going, dude. It's working.
So you know how you said asset prices trend? This one oscillates.
It does.
The Russell sucks.
No, the relative ratio.
Sucks everybody
We're
in.
talking about a relative ratio.
No,
bro.
I know. I'm just saying. Small caps suck everybody in periodically, and then they roll.
Is it going to stick
guess
this
we'll
time?
see.
Yeah.
I think so. You want to walk through it together?
Given how bearish I am, it'll probably stick.
I think this might be the time. I
All right.
really do.
I hope it's true.
Well, why don't we do a sum of the parts analysis of that? So let's look at the index. Look at this base.
Yeah.
This thing has done nothing since the end of 21.
Bigger the base?
Nicole,
That's
can I
my
get one of
point.
these?
That's
Can I get another one of these?
that's-
JC, bigger the
that's my
base?
point.
What do we say?
The bigger the base, the higher in space. I mean,
Louise?
is that funny?
no, I like it.
So I asked Alan Shaw, rest in peace, before he passed. I'm like, where did you learn that? Because Louise Yamada says she learned it from Alan Shaw, and Alan Shaw was older. And I'm like, Alan,
That's why, isn't it?
no.
You
This
always
was
quoted
way
Louise-
before. Dude, Alan Shaw was like a zillion years old, and he learned it from his predecessors, and he started in the 50s. So his predecessors were trading in the 30s and 40s, and they taught him that.
Wow.
So this has to go way back.
That's wild.
I did the homework. I did the due diligence, right? So small caps going up, and this is not oscillate, Josh. Look at this long-term chart. This is from the lower left to the upper right, bro.
Yeah. I think I meant like relative to the S&P. Like there are times the Russell outperforms, but it doesn't last long.
I guess we'll see
And
what
then
happens.
relatively.
Because
like,
put up the communist ones. So these guys discriminate, right? Because you can get in the Russell 2000, they'll let anybody in. But in the S&P 600, you got to be making money.
yeah.
How dare they?
Only profitable companies.
You got to be making money
you get
to
more,
be in this.
You get more financials in the 600, I think.
So what's hilarious about fundamental analysis is that the ones with the Russell 2000 that you don't need earnings, you could be losing a fortune. Don't matter, you're in. They're doing a lot better than the companies that are only in if they're making money. So if you're only buying good companies, you're missing out on the best performers.
Yeah.
Good companies, right?
Yeah.
And then you could just look at the composition. You're getting a little more healthcare, and you're getting less industrials a little bit on the Russell 2000, but relatively comparable. So I just wanted to show that. You're getting a lot more consumer discretionary in the S&P 600.
Russell 2000 is for the bigger small biotechs. Look,
Yes.
it's 19% biotech, healthcare, which is mostly like profitless or barely profitable biotech.
Yeah.
It's 18% in the S&P 600 banks.
Yeah.
So makes sense.
Yeah.
Let me say, and banks is still pretty big in the Russell 2000.
Josh always says it's only regionals.
Let's
and
do
I
a
would say
sum.
it's
Let's
not.
do a sum of the parts.
Only.
Let's do a sum of the parts. So first of all, this is the small cap momentum index,
Okay.
making all-time highs.
Okay.
Okay, so this is not bearish, right? These are the momentum names doing well that tends to happen in healthy market environments. Now go to the industrials. All-time highs for small cap industrials. All-time highs for small cap materials, right? All-time highs for small cap technology. So when people are telling you that small cap stocks aren't working, maybe your small cap stocks aren't working, but clearly small cap stocks are working. We can keep going. And then, the small cap financials, like
Oh
you
my
said,
God.
come on, is there a more
my
important base in the stock market right
Dude,
now than this
How
one?
does this one resolve?
Way
It's gonna
higher.
go, right?
Way higher.
Look at what
the
are the
hell-
other ones doing?
Well, time out. What the hell is a small cap financial?
Regionals.
That's it.
There's 260 of them
They're
in
like
the Russell
not
2000.
even like sub-region, like thrifts, like
It's a lot.
community banks.
it's a lot of small banks.
Yeah. Okay.
There's some other things mixed in there that are a little bit lost, but it's banks.
It's Jackson Financial, Lincoln National.
I think Kinsale is in this group. It's
Piper Sandler,
insurance
Stepstone.
company.
We know these names.
We know some of these. All right. I want to dive in there. Okay.
You also got a couple hundred biotechnology stocks. Biotech hitting the highest level since 2021. Healthcare, big component.
I don't like to trade charts biotech given the nature of the tape bombs, good and bad. Just, you know what I mean? Like,
but if you filter by companies that are above $1 billion,
it's different.
You're eliminating a lot of that risk.
Yeah,
and if you put together a basket of you should see my portfolio over the last year. You'd think I'm some kind of scientist or something. Like
every other stock has labs.
I feel like Dave Chappelle. Yes, scientist. You know. So and then look at discretionary. Look at that base in discretionary. This is small cap discretionary. Looks great. And then look at small cap energy, right? And then I want to dive into energy before we hop for the day.
Okay.
So this is I remember where I was in the summer of 2008. The last time energy was here.
I know, dude. This is like. I can't imagine this not being the trade of 2026.
You and me were a beer
this
bar.
Will not be on any magazine cover anytime soon.
I'm waiting for it, man. I'm waiting for it.
That'll be the end. That'll be.
We got an Iran economist today. Does that count?
I can't imagine this not being the gold of 26.
Look at that base, bro.
I know.
By the way, gold looks just like this before it broke out.
I'm telling you.
Throw up the next one.
I'm telling you that I'm bulled up on oil and gas.
Here you go.
Let me say, yeah. So I'm long this stock, Exxon.
Come on.
It's going to. I mean. I don't understand how it's not 150 already. I know it moves slowly.
It's a big company.
It's a very big stock and moves very slowly.
It's a big company.
Okay. What else?
Oil services. Look at it, trying to get above those 02 lows.
I'm going to pitch you an oil service name in a minute. Okay.
All right.
Yeah.
And then look at the relative ratio.
Yeah.
Between XLE and the S&P 500.
Yep.
Right. The energy versus tech looks very similar.
That looks very good.
And then here's one I like. I'm long this one. This is Solaris Energy.
What do they do?
I don't know.
I'm just kidding. I know you don't know. Who cares?
Allegedly, they're in the oil and gas space. But I don't know. Maybe it's a Ponzi scheme. I don't know. I have no idea. Why would I know?
Okay. All right.
I mean, they're doing something right. How many energy stocks do you know that look like this?
Not a lot.
Right?
The refiners look like that.
Oh, they look good. And then, so this chart comes from Macro Charts. Great. Shout out to Macro. He's a great follow across the board.
Who is that?
Who's Macro Charts?
Yeah.
He's anonymous, but he's basically like the consigliere to like a bunch of like big hedge funds. Like he's the real deal.
Okay.
So this is a chart from him. This is the oil silver ratio going back to the 60s.
Strong buy. Because people are talking about silver. Oh, did you know that transistor chips require a certain amount of silver? Okay. So if that's why you're really bullish on silver, then you can buy oil here. That's if that's like really the story.
I think this is an interesting way to look at things. That if you're bullish of energy, this is a
what do you think? What do you think of this?
I forgot to put this in the doc. So I grabbed one chart from Todd, our boy Todd Sohn. Look at how hilarious this is. Todd said this one's for the degens. It's the ProShares Ultra Short Silver. So obviously this thing has been going vertically down.
Yeah.
Crushed.
Right, it's crashing. But normally nobody buys this. Like there's no volume until people are trying to call the top desperately in silver.
Desperately.
Like that's a dope chart.
Throw up the silver. Look at that thing.
God damn.
So this got a $100 roll.
Yeah.
$100 roll written all over it.
I think that'll happen.
All right. So let's play.
And then what?
Let's play Perma Bear. All right. So what? Okay. So what's going to change all this? What's going to change precious metals? What's going to change this massive international
dollar breakout higher?
So we came into the year looking for a breakdown in the dollar, right? Long euro, long British pounds, long Swissy, long EM Forex, and that worked out great. If the dollar
last year,
if the dollar breaks out above 100, I think that's a problem, and we're starting to see a few cracks. And not every crack needs to turn into a market crash. But every major bear market,
I was going to say that could give you like the correction or the dip that hasn't happened yet.
Every crash, every correction starts with a crack or two. Here's a couple: discretionary staples not making new highs, with the S&P making new highs. The Magnificent Seven hitting new 4-month lows today on a relative basis. So if you're looking for a culprit for this particular cycle, that would be it. And then here's the Frankenstein, right? So it's the last chart. So this is the Frankenstein trade where the bonds have never been more dead. Literally dead. And stocks like that. right?
We talked about this the other day. Vanguard put something out saying the right portfolio asset allocation for this year is 40 stocks, 60 treasuries. And I can't remember ever hearing them say that. And I didn't even bother to track down what the rationale was. But just that idea that like somebody's even saying that is interesting to me. So
It's weird.
they're not looking at the charts. They obviously have another reason that they're saying
We're going into a midterm year. We're in a midterm year, the worst of the 4-year cycles. Even though technically,
That's what Vanguard's looking at. for sure.
technically, when it's
You
the
think so?
second
Oh,
term,
yeah, the cycles.
Joe Davis.
Yeah, he's a midterm cycle. I'm kidding.
year six
So
for
what would they
second
be
term
looking
is
at?
not as bad. It's actually pretty good. But
Okay.
nevertheless, midterm year, historically not great. So one can argue, what should we be looking out for things changing? I think that discretionary staples ratio, I think tech underperforming. Dollar rally, and I think bonds waking up, because if they're look at how boring bonds have
Wait,
been over
can
the
I
last
stop
few
you?
years.
Dollar rally, forget about the implications for stocks. That's really bad for people that are chasing silver here.
I think it's bad for international stock investors. I think it's bad for silver, precious metals, rocks in general of any kind, whether it be of the precious or
Yeah.
base variety.
Can we go back to the previous chart?
Yeah.
So I think this is really interesting. The Mag 7 one. I think up until now, people were waiting for like the .com divergence, where you see the rest of the market and only the Mag 7 are the ones that are left standing. And then, of course, we know what happens next. It would be interesting if it's the reverse of time. If the leaders go first and now they pass the baton to the rest of the market and it's like a sort of fake handoff, and then they all come tumbling down together.
Maybe.
That would catch me off sides. I mean, that'd be interesting.
If the dollar's above 100, I think that's a big problem. If you start to see volatility pick up in the bond market, that's a big problem. You know, generally the trend is up for stocks. Like we want to be buying stocks, we want to be buying breakouts. And I don't necessarily think it's a binary outcome where like, oh, everything's going to get crushed. I think this is going to be a K-shaped market. Look what I see what I did there. Come on. That's pretty good,
We
huh?
like it.
Very good.
We like the K.
So I think that rather than 2025, everything went up, some went up more than others. I think we could be very high likelihood that in 2026, we can have huge winners, huge losers, and some that kind of just trade flat. I think that would be a very high likelihood.
That's what AI is
think-
doing. I agree.
I think most investors would be okay with that as long as they think they're going to be the ones that are in the ones that work.
I
In
guess
the
we'll
stocks
see.
that work.
Be selfish,
All right.
right? Be
All right.
selfish.
Hey, what a tour de force. Ladies and gentlemen, JC Parets,
That's what I'm saying.
thank you. And
That's what I'm
we will include a link in the description so people can check out your slides, Straza's slides from Stock Market
Because
Summit.
we did hours. I mean, Josh and Batnick and myself, we could be here all night, but they got things to do. I got nothing to do.
All right.
They got things to do.
Do you have your brokerage account open and logged in?
No.
All right, I'm going to pitch you some stocks. You might want to buy a couple of them.
Oh, I'm gonna talk to my wife, Josh.
No, I'm not pitching you, but I just want to get your take on these. Sean and I keep a list of the best stocks in the market. You know what we're looking for. The general idea is we buy strength. We're not looking for reversals and pieces of shit. We're not bottom fishing.
Is that on the fact sheet?
Yeah, we're not storytelling. We're not listening to conference calls. It's not that we don't care. It's that's not the selection criteria.
Okay.
So might have a personal interest in learning why a stock is going up, but it doesn't start there. Okay. I want to show you a couple and just hear what you think. It doesn't really matter what I think of the technicals themselves. Morgan Stanley's been on best stocks in the market list, I think, consistently since the summer. It's probably been a good 7-8 months.
Man.
And it is just, the move today is obviously earnings driven. So let's assume a little bit of today's move fades. This is as good of an uptrend as I've seen in this stock since I started doing this 30 years
I
ago.
feel like you normally don't see stocks like consistently
Look
for
how-
that long of a period of time sitting above the 50 day.
Look how
That's
well
tight.
Look how well behaved this is. And it's not that there haven't been like rough weeks, but like this stock has given no one any reason to sell it whatsoever if they're just focused on price. What are your thoughts?
I mean, financials in general have been a monster, right? European financials, Japanese financials,
U.S. money center banks.
all of them just
Yeah.
absolutely ripping. So it's more about the group that it's in and less about the stock itself. You know,
I agree. These don't really separate that much from each other. Large cap U.S. financials, they tend to do what they're all doing. I agree with that for the most part.
Yeah, I mean, you know,
This one's not your favorite.
it's not that it's not my favorite. It's that they're all kind of like this, right? Where like
Yeah.
they're extended. You know, look at Bank of New York Mellon, absolutely ripping. Look at all these European banks. I mean, the trend is up. And for me, it's less about trading Morgan Stanley and more about thinking about the implications. You know, if these financials are up, not just in the United States, but globally, like I'm old school. Like I came up in the 2000s. I was there for the great financial crisis. We don't have bull markets in America without financials. And in the rest of the world, it's even more egregious when you look at the holdings of the companies in those indexes. So like
I look at an MSJC and I just in my mind, well, how do they make money? They have everything in their favor. There are IPOs, there's M&A. The FTC isn't saying no to anything unless Trump wants to get something for himself out of it. So there's deals all over the place. You could bring companies public. Asset management revenues are ripping because asset prices are at record highs. They make money as a treasury bond dealer. I think they're in that business. Net interest margin, spread businesses, like proprietary trading, fixed income commodities, currencies. There's nothing they don't make money from. There's nothing that they're involved in that's not doing well right now. And
I would
think
say
that's the signal
say
here.
189 is a big number there.
Okay.
Big, lot of market memory there going back, you know,
Put up John GS.
to the great financial crisis highs. So if we start falling back below 189 and kind of holding below there, that could start to turn into a problem. But if you're above 189, I mean, this another 50% higher, why not?
Basically the same chart, Goldman Sachs.
Yeah.
Morgan Stanley's been an easier ride. You've had some trend line violations here along the way. I just think that's the nature of it being a higher baited name than Morgan Stanley, at least these days. But like huge winner. Yeah.
Same trade.
Same trade. Okay, I'm with you. All right, I grouped these together.
Yeah, the trends are not down.
Here's a question. Next chart. You can't buy this with a straight face, right?
Why?
I don't know. I can't. This KLA, this has been on the best stocks in the market list for a while. We wrote it up a few months back. It's been like a massive home run. This is parabolic to me. What do you think? You can't buy this stock.
No, I cannot.
No way. Does the presence of a gap like that bother you?
No.
That's a baby gap.
Would it stop you from that? That would not be the thing that would stop you from pushing buy on a KLA.
No, I'm looking at like 15 and a quarter. If we're above 15 and a quarter, I think you're fine. You know, that gap is just evidence of, relentless buying pressure. People are like, oh, JC, it's overbought. It's like, well, how can an overwhelming amount of buying pressure possibly be a bad thing? I don't know. I don't understand.
Well, this is reacting to Taiwan semis news today. That's
Sure.
why it gapped today.
It can be it can be a bad thing in the very short term, but who cares?
Semiconductors are making all-time highs on a relative basis. So the fact that you're putting up a semiconductor stock that's making a new high, like it better be.
Yeah. No, I agree with that. Next one.
What are you doing?
Here's another one. We've been writing about this one all year. Lam Research, LRCX. Not as parabolic as KLA, but basically the same chart.
Yeah, I mean, like, what do you want me to tell you? I mean, it's a bull market.
The question is, can you hit buy on a new trade in this stock today? Or you would not do that?
I mean, I wouldn't today because that's not how I trade. It doesn't mean that it can't go higher. Like 236 is a big one here. You know, this goes back to the dot-com bubble highs. 236 is a big one. So if you could
you're looking at 25-year charts right now? Yeah, all of these stocks were like also part of the original dot-com bubble.
Me and Leonardo Fibonacci de Pisa are getting down right now on this laptop. You know what I'm saying?
Okay.
236 is the big one. 381 is next. So if it could stick that 236, yeah, it could keep going higher. But, expect volatility. I mean, this thing's going to be down 10% in 2 days.
For no reason.
It's just going to happen. In a week. Easy.
And it'll shake out the type of people who bought today without even thinking about it.
That's right.
All right, next group. Here's CBRE. In 45 minutes, I'm going to go pitch this with Sean at the New York Stock Exchange. I'm not going to tell you the fundamental story. It's commercial real estate, which everyone obviously hates and thinks is a worthless asset class. And this stock doesn't give a shit what anyone thinks. And I love these types of setups where they're consolidating below resistance for a while and knocking on the door.
Me too.
And to me, this is so obviously going to break through. It is the blue chip of the space. It's an asset-light business in commercial real estate, which is an asset-heavy sector. Yeah. And they're going to treat it like a tech stock because they've transformed the whole business from brokerage transactional commissions to an ARR model.
Can I tell you something?
And the street loves these stories.
I'm buying this stock today. How about that? You just convinced me. I love this chart.
Yeah.
Like it?
I like it. 185 is coming.
I'm buying this right now.
All right.
185, and then after that,
And I'm not front running the CNBC Pro people because I wrote it up this morning in the column.
260,
and,
260 after 185.
all right, I don't own it yet. I might pull the trigger too. First Solar. I don't know what to do with this. This stock's been on the best stocks in the market list. It still is.
These stocks are so
These
volatile.
are so hard for me.
Yeah,
these
no.
are so hard to figure out where to enter, where to exit. But think about it. While we're on the subject of 25-year charts,
No solar stocks ever.
like no solar stocks ever,
No.
because you lost money in Enphase.
No, but
That
no.
wasn't good though,
no, dude, bro, this chart, these,
dude, bro.
dude,
If you're gonna do solar, you gotta
JC,
do Chinese solar.
JC.
Like you're either gonna go full
Or
junkie.
TAN, the ETF.
fine. You
Yeah,
ever
but
make
I
money? You
trade
ever make money?
ETFs.
JC, you ever make money in solar stocks?
Yes.
Okay.
And I've lost money too.
Yeah.
I mean,
Yeah.
I've traded everything over the years, but check out Array.
What is the technical read? Somebody shows you this chart on a trading desk. What's your answer to them? There's nothing here.
It's a mess.
It's a mess, right?
Yeah, it's messy. I like Array better.
So I can't bring myself to write this one because it just looks weird. All right, I have one more pair.
Wait, hang on. What does CBRE do before I buy it? I don't care. I'm in.
Great. One more pair of stocks. Oil services. This is Baker Hughes. I love this
Yeah.
break. I love this
Man.
breakout.
I want to buy this too.
Look at the long term on Baker Hughes.
Yep.
This seems like pretty momentous above 50. Can't this go to $100?
I mean, are they still counting rigs?
Do you forget about all that? Do you know that
That's a thing that they do.
crude hasn't even rallied yet, and this stock is breaking out? When crude goes, this stock really goes, and, that
why,
hasn't even
why
happened
Baker
yet.
Hughes and not like Halliburton?
Well, that's my next chart. So
Halle Berry
here's Halliburton. Halliburton's already gone.
and the Slumburger.
That's also on my list.
Like
they all
go
look
to
great.
this restaurant and order the Slumburger. No
Um,
pickles.
Do you like this bet? You like this Halliburton better than Baker Hughes? Or
I
you
mean,
like
I
them
think
both?
I like energy. I'm long energy. I'm getting more long energy. Oil services. Pick which one you like. They're probably going to move together. Higher beta is going to move more.
Yeah.
If you want to get junky, go offshore drill or something like that. But if you want to get in energy, you can get in energy. And there's a few ways to get the juice. You can either go down the cap scale and buy some junkier stuff, or you can be in the derivatives market with the bigger names. I think either way.
I think the services names could all rip this year with a tiny bit of help from crude.
Nobody owns them.
But you need a much bigger move in crude in order for like the oil producers to make that kind of move. I think the services can just go because they're going to go,
And the refiners have been going, but
and they already broke out.
Americans Americans don't own it, and I think that there's a squeeze to be had there, right? Because if everybody owns something, it's probably a little too late. The fact that the Nasdaq is 0% energy, S&Ps are 2% energy, Dow's 2% energy. How much less energy could these things be?
Nobody owns it.
Nobody's got it.
Last question, totally off topic. I just was curious to get your thoughts on it. I forgot to text you. Can prediction markets be analyzed by technicians?
They're just so illiquid.
Let's say they were more liquid. Let's say they became more popular and there was higher contract volume. Could you look at a yes/no chart for any subject and determine buyers versus sellers or levels?
I mean,
There's
listen,
no levels.
At the end of it's not levels. At the end of the day, what are we doing as technical analysts, as technicians? We're analyzing the
What are we
behavior-
doing?
Oh, we're analyzing the behavior of
This
the
kid's
market.
This kid's literally trading
I
right
told you I was behind it. I'm in CBRE.
We're looking at the behavior of the market and market participants. So if these prediction markets didn't suck so much and they weren't just a bunch of glorified penny stocks, at least the penny stock people tell you that they're penny stocks. These people are like, oh, it's the prediction market. So you're f***ing gambling like an idiot, right? Like idiots gamble.
So you're not a fan.
No, it's not that I'm a fan. Is that they're nothing. It's an irrelevant penny stocks scam. Like it's not
Do
anything.
you know Thomas Petterfee came on Halftime Report last week and wanted to debate me? Founder of Interactive Brokers. Brilliant man. Great man.
Yeah.
He wanted to debate me. It turns out we didn't really disagree. He had made a statement that he thinks prediction markets will become larger than the securities market.
Yeah, I heard that.
I said,
Multiple people have said that.
I said, I don't think so. Not because there's no merit to prediction markets. I think the binary nature of them, people will lose money and lose interest very quickly.
You remember binary options?
Well, yeah. I mean,
They're
isn't
just
it zero?
rebranding that. That was a scam, and a lot of people lost money, and people went to prison. This
What
is
was
same
the
thing.
binary options thing? What
Exactly.
I totally forgot. I remember the term, but I forgot what people were trading.
everybody's in.
They're
for the-
buying up down on a stock.
It's the outcome. It was a binary outcome. And that was what the option was. And then they canceled all that because people were trying to manipulate.
you remember that?
No, I don't. But Josh's point is
They're going to say that about the prediction markets.
People-
Remember the prediction markets?
no, it's not going away. But people do not like all or nothing outcomes. Because with the stock, if you're wrong, you could take. All right,
I'm an investor now. I was a trader. Now I'm an investor.
No. My max loss is 8%, and that's it. With the prediction outcomes, for the most part, not for the most part, unless you're buying and selling, like unless you're trading them, you're right or you're wrong. You make money, you lose money.
Well, there's no assets. So there's no liquidity. There's nothing there. It's a fugazi. Like, look at the stock market.
It's positive
It's
sum.
$70 trillion in the stock market.
And the pie is growing.
There's like a couple of $100 million
Why
in
does-
all the prediction markets combined.
Well, they just started.
So why does he think?
It's irrelevant.
But
So
I
know.
agree.
So
I agree.
Interactive Brokers launched. Obviously, every other brokerage launched prediction markets. So I understand like being promotional about it. I wonder, and I wish I got to ask him, but it's TV, so I had like 20 seconds. I wonder why he thinks that binary bets are going to become a bigger market than the securities markets, which includes bonds. Why would that happen?
First of all, the CEO of Kalshi said the same thing. But the point is that
Of course,
If-
right.
that's his
Of course he did.
business.
if you're
That's
the
his
CEO
business.
of a company, your job is not, and I don't know this guy that you said you were going to fight or whatever. I don't know any of these people.
No fight.
No fight.
He's a
Debate.
legend.
He's a
Debate.
legend.
He's a legend.
He owns 90% of the equity of Interactive
He's a
Brokers.
legend.
I'm sure he loves his kids. My point is that that's
shit.
not the point. The CEO of a company their job is to make money for shareholders, right? So if going on TV and telling the whole world that this penny stock market is going to be bigger than the entire stock market, that's what his job is.
Yeah.
Like, even if it's like the dumbest thing in the world, he's helping his shareholders as he
you're
should.
100% right. Guess right. What's a better business, commission-free trading or taking a rake in the prediction markets?
Way better. I think it's interesting that Robinhood is all in prediction markets.
Vlad said it too. Vlad's super horny on the prediction
Vlad's
markets.
never been hornier. He told us here on the show. And then Schwab's like, nah, we're not doing that.
It's a fade all day.
Yeah.
It's the latest. It's like the latest gimmick that like people that can't stay focused and they're chasing the next shiny thing.
I told that
like
to
those
Vlad.
are the types of people that are chasing.
I
this.
said, Vlad, I think everybody's drunk on this stuff. Like, I don't think it's going away. I think it's going to grow. But the way that we're talking about it is so insane, in my opinion.
I think it'll be very, very niche. I think it'll be very niche and it'll be a lot of fun to watch. Like, people bet on things and watch the election stuff, especially. I can't imagine it becoming like a gigantic market. Maybe I'm an idiot and will laugh at me in 3 years. I think I'm more on your side.
For the record, I hope that you and I are idiots and we're dead wrong, because that would be cool. But these are glorified penny stocks with no liquidity. And if you are gambling on these things instead of actually owning assets, I think, in my humble opinion, that you're a fucking moron, right? And anybody who's telling you to bet instead of invest
Don't
in
hold
assets.
back. Don't hold back. Say what you really feel. All right.
I hope I'm wrong.
Ladies and gentlemen, thank you for joining us on this edition of the Compound and Friends. I would like to give a huge thanks to our friend JC Parets. JC's research can be found at trendlabs.com. JC personally can be followed on x.com. It's x.com/JC_Parets_X. We have to work on that. It's no good. We got to fix that. All right. And you're on LinkedIn. JC Parets, CMT, as in chartered market technician. Anywhere else people should be going?
OnlyFans, right?
OnlyFans.
Yeah.
Okay.
Follow me on thepolymarket.com. I got my profile in there.
That's right. And if you're anywhere within the vicinity of the national championship game on Monday, you will probably be able to hear JC cheering for the
Dude,
U.
there's other loud, obnoxious Cubans there, by the way.
I know.
I'm not the only one.
All right. Guys, thank you so much for listening. Thanks for watching. We'll see you soon.